see Hurley Investments market view commentary for the 15th of December. This will be our last market view commentary until January 5th of next year when we start up again. A couple things I'm going to go over. In fact, this will probably be a quick one. This will probably be a half-hour one, but there's some important information that you guys are going to find out here. Most accounts right now look cash heavy. We got called away from Micron at 330, it's not 330, at $230 plus an 11-cent credit. We do have a Micron 220 300 stock replacement strategy in place. So even though we're called out, we do have the LEAP 220 300 bull call stock replacement strategy for Wednesday's earnings. So if we're wrong and we think, hey, it might go farther, we have taken a small portion of the profits, I think it was like 16.66%, and created a strategy to continue to run higher if Micron keeps going higher as well. A couple people asked, why are we looking at being so cash heavy? And I've got an article, our first article, that talks about this opportunity, but the real reason is when you see the S&P move 70% over a 3-year period of time, then the expectation is a 35%-ish pullback. And yes, we had a 20% pullback this year. And from all of our research we're doing right now that we can't wait to get in touch with you at the beginning of next year, we're believing that we're looking at probably one more bullish year, and we're probably shooting for the S&P 500 at the end of next year to close somewhere around $7,750. So I'm not making that set in stone yet, but we could be looking for a 10 to 14.5% run into next year. We'll talk about that next year. But a couple people asked, why are we so cash heavy? And this is the reason why. We've run so far with a pullback that we just want to take profits. And the first article, the Dan Niles article here, saying why he likes cash, and it really comes down to, at some point the market's going to say, hey, we don't have a great buying opportunity. And I just thought it was it's not bad to take your profits every so often. If you can't book those profits, it's sometimes hard to see the profits evaporate as you're still hanging into something, adding shares to it. But when you hear the talk of fully valued, we have plenty of stocks now that are fully valued, and that it just doesn't make sense to not take a profit on it. With that said, we are looking to get called away on Google. We do have covered calls at 300 for a $7.98 credit. We were going to get called away on Bank of America, but the financials are acting a little bit different than we thought. And a couple of you have called me today on this one. Yes, we rolled. We rolled the Bank of America 5250 covered call for, I think we, not I think, we had $1.01 credit. We bought it back. So we bought to close, and it cost us $3.35, and opened a $55 20 of March covered call for $3.40 of credit. And some people were working the numbers. Let's work them for you just really quickly. So we opened the upside by $2.50. We now are no longer obligated to sell at 52.50. We're obligated to sell at 55. We did a net, well, I guess we made 5 cents, right? But when it's all said and done, we rolled straight across, so we didn't gain or lose anything. So the short answer is, and we still have the original, can't spell, $1.01 of credit. And we might be doing this going into next year, because the upside for Bank of America is only $62. Going into next year, the upside on Bank of America is only $62. And it typically costs us somewhere around $1.40 to protect it. Bank of America finished today at $55.33. So if you're going to protect it, it's going to cost you, boy, about $6.20 to protect it at 55. That means that we're going to have 80 cents or $1 worth of profit by the end of next year. So we were looking at getting called away from Bank of America. We still might get called away if it has earnings in January, leaps to a higher price. We're going to get called away, and we're going to create a stock replacement strategy for Bank of America. But right now, we decided we'd push that out in time a little bit and see if for some reason we can't go a little bit higher. Now, banks, when you have a bunch of rate cuts, they usually stop making money. But this morning, Fed Chair Miriam was speaking to the Columbia student body, and he said some things that were really interesting in regards to the Fed's decision. He was a dissenter, but was the dissenter that said it should be a half a point, well, a half a percent, 50 basis points rate cut. The other two dissenters said that you shouldn't have a rate cut. Some interesting comments were made as I've been studying the rate cuts and where their thought process is and so forth. And in real life, as I work the numbers, Chair Marion, he seems like he's got it under control, because in real life, and just the way things have come up, he sees the shelter inflation coming way down. And shelter inflation is rent and home prices. And his reasoning behind it is, when the rent skyrocketed, everyone jumped in and really raised their rents through the roof. If you're in New York, apparently it was awful there. Yet, as as rent and new leases have come to pass the last 2 to 3 years, rent's actually starting to head down. There's been, how do you say it, too much supply of places to rent, and it ruined rental markets such as New York when they jacked all the prices super high. When you do that with rent, people go into homes, home prices have also gone up. And something that's interesting about home prices are people don't want to give up the lower 2.75 to 3.50% refinanced home interest rates. What's our biggest concern? What's our biggest concern right now? Is it inflation or is it job loss? What do you think? What is our biggest risk to our markets by way of the Federal Open Market Committee? Maud would say both. The numbers don't justify that though, Maud. Job loss. Anyone else have any ideas? The job loss or inflation? Job loss, another job loss came through. Their bigger concern is job loss. And they're calling that in regards to, and I found this very, very interesting. They're blaming it on AI. But if you think about it, we heard that same thing with the internet, how the internet was going to put this big stress on the job market. How Google and search engines, how reading stuff online was going to bring this big stress to the job markets. And yes, we'll be honest with you, magazine publishers, newspapers took a significant hit. But ask yourself, were more jobs created from the internet than were lost in primarily those three fields, right? Publications, as I sat there and thought about it, I'm like, yeah, I mean, AI will probably take some jobs away. And much like the internet, it'll probably create significantly more jobs for people to go into. Who would have thought people could make a living off of shooting videos about themselves on YouTube, right? Who would have thought people would be able to get such easier drop shipping home businesses now and advertise online for so much cheaper? I don't have the numbers as I was hearing this today. I'm actually up in Washington in the flood area, believe it or not. But shocking that as I thought about his explanation, I don't know if job loss will be transitory as they think inflation was. I found it really interesting. One of the only people that thinks tariffs caused higher inflation. Who do you think that is? And the Fed meeting, who's the one that thinks, one of the only ones that thinks tariffs are causing higher inflation? Who do you think it was? It's Fed Chair Powell. And it was interesting to hear Miriam talk about the discussion in the different areas like Chicago and New York and Dallas and California. it's a trickle down effect, but as you lower the cost of energy, everything else seems to come down with it. Now, I'll be honest with you, some things that haven't been the same, and again, I talked about them before, custom cabinets, which in my sense equals wood, but it is down significantly more than our peaks that we had. It bugs me, but fishing line, fishing lures, and I guess I'm just going to say Chinese rods. My brother makes his own fishing poles. Uh, those seem to be ridiculously expensive. But it's really hard to dictate something other than wood mathematically since tariffs have been into effect that it caused a sector, a section, a category of inflation. And it was shocking because some things were transitory as the tariffs came on, they raised up. One of them was clothes, and shocking how clothes prices have come back down. So as I sat and listened to Chair Miriam speak this morning, he spoke on CNBC for about an hour. As I listened to what he told the Columbia student body, the numbers are saying that we have significantly less inflation coming to us in the future, primarily because shelter inflation has been coming down 1%, and because there's a backlog and it usually takes a year and a half to 2 years for rate cuts to affect the cost of homes and so forth. We're looking at the cost of homes and so forth coming down significantly, as well as the cost and rent in 2026. We should still have the cost of fuel, of gasoline, which affects every industry almost in transportation and creation of their goods. Another deflationary push into next year, which really made me think if maybe this AI craze is not over. It'll be interesting to see what we come up with as we go through and we work our numbers for stocks into next year. As I sit with Brian and Nate and Keeve and Spencer, and we start talking about, okay, what do you see next year and why? Where can you show me numbers that justify something you might be worried about? Have you worked your numbers on our spreadsheet? We've got that up here somewhere. Have you worked your numbers on the spreadsheet for the stocks that you were looking at? It's going to be very interesting to see where we come up with and if we're going to see a broadening increase in stocks going into next year. If we have a broad-based growth pattern going into next year, yes, we'll have 293 or 294 other stocks in our S&P 500 that have been relatively held down with huge upside potential. Someone asked me if I could name one, and I was going to say, take a look at Abercrombie and Fitch. You want to see how quick stocks can come back? Good earnings, and the stock went from 65 up to 118.70. What a significant bounce higher. Look how it broke the 50-day right after earnings and closed above the 200-day so quickly. There are a lot of stocks with this spring-loaded rebound that we could see in the very near future. And this is retail, for crying out loud. Retail. It'll be interesting to see where we can find some undervalued stocks going into next year. With that said, I did not pull our briefing.com picture, but we do have Micron at the close of business on Wednesday. Dow Jones bullish, and we have a little bit of room to run. We still can close the end of the year at all-time highs. S&P 500 just crossed over bearish, just holding on. Well, I can take that back. Hasn't quite crossed over on all three technicals, so it's still technically bullish, but holding the 50-day. It'll be interesting to see if we get a bounce in the next couple days off. Dang it, this is not the S&P 500. No wonder I got a little confused there. Let me try that again. I think I'd pay a little better attention to what I'm putting in here. S&P 500 looks more like the Dow Jones. Plenty of room to run. Would not surprise me if it comes down and touches the 50-day for a bounce higher into the end of the year. The NASDAQ, the one that almost looks bearish, but it's not quite bearish yet, held the 50-day, crossover on the RSI, just touching on the MACD. Interesting to see if we'll get a bounce higher on that one. In fact, I don't know if you paid attention, but some things that moved. I mean, we were down a little bit today. I found it interesting. So interesting for us, as we're looking at our stocks, on a down day in the stock market today, Apple was down and we had a 295 covered call. Great protection on Apple. Boeing was up today, and Boeing's uncapped for us. We had Disney down slightly, and Disney's uncapped for us. Bank of America up slightly so that we rolled and gave it more upside opportunity, and kind of a bad down day in the stock market. GE Aerospace was up. GE Vernova was up. We have JEPI that was up slightly. Lockheed Martin making a comeback, bouncing off of 460 where it's been for months, up at 484. Meta up $3.80, not quite above 650, finished at 647.51, but it has an opportunity to get above 650. Micron down $3.64, but we cashed out big money. Micron is now sitting at 237.50. NVIDIA went higher today. We don't have NVIDIA capped right now. Palantir down 32 cents. We have LEAP covered calls, a couple different strike prices, and the shares have 180 covered calls on them again. We seem to be in really good position going into the end of the year, beginning of next year, using our covered call strategies. Little protection with the short call giving us some credit. Earnings, it's a pretty, not too much happening on earnings. JBL and Micron on Wednesday, Nike, FedEx on Thursday. Economic reports, they're kind of jumbled right now. So let me go ahead and let's run to show you economic reports. You'll notice manufacturing, prime manufacturing. Let's see if we notice it with it getting updated. Empire Manufacturing, supposed to be positive of 10.6, was down to negative 3.9. Housing market, 39, still in consolidation. But looking at this week, tomorrow we're playing catch up. We're playing catch up on non-farm payrolls, private payrolls, unemployment. This will be very interesting. If we have any good numbers coming through, our market's going to run into the end of the year. Well, Kevin, non-farm payrolls is 30,000 jobs. Yes, this is historically when people are getting let go or being ready to be let go for the seasonal jobs that they've had leading up to Christmas. None of these were filled in on Sunday. We didn't find out today till the average work week numbers that they were going to come out on Tuesday. They were trying to get them to come out, but obviously some aren't. They just don't know. Retail sales delayed, which is funny because we have the retail sales that's delayed here, right? Previous month's retail sales, or are we delaying the retail sales that are supposed to come on Tuesday? The short answer, all I'm trying to show you is that things are a mess right now. Until we get caught up, the economic reports aren't going to have much effect on our, they're just not going to have much effect on our futures because we're not sure what to expect. All righty, here we go. We are still trying to let as many things run to the end of the year as we can with covered calls on them. Very interesting. Last announced top 1.1 million this year, the most since the 2020 pandemic. And this is from Challenger. It'll be interesting to see if all of those come to fruition. Chances are you might see a good amount of layoffs. And when people find out that you still have to check artificial intelligence work, they're going to be coming right back. So it'll be interesting to see how the layoffs work and if they even do. Let's just put it that way. Strategist reveals an asymmetrical AI trade, a lot of upside without much downside. A lot of people are talking that the AI trade is over, that it's been over. Yet, Alphabet, Meta, Apple, Tesla has a big bounce higher if we IPO Elon's other company, SpaceX. It'll be interesting to see if it's dead. It doesn't look like it. There's real numbers. I'm not sure how we're going to be playing AI going into next year. NVIDIA can now sell the advanced 200 chips into China. But will Beijing want them? Because right now, Beijing is saying they don't want the H200s. They're going to make their own. That'll be interesting because there are other reports in China saying the companies want them and want them something fierce. Moment you see China say, okay, we're going to take an order of $5 billion of the H200s, we'll see NVIDIA pop back above 200. Trump scared Europe with his national security strategy. That's not a bad thing, the ex-CIA chief says. Again, we've known this for forever, but it was a game changer when Trump said, you know what? We're done with NATO. The fact that the U.S. is paying 80% plus of the NATO bill, which is primarily to protect Europe from Russia, for Trump to say that he's done, it's amazing how much, well, it's amazing how the country started to contribute and even how they're starting to contribute for their own defense and increasing defense spending for their against their own domestic product, I guess would be the best way to say it. Pretty neat to see that he's finding ways to save us money in other areas of the world, let's say. Divided Fed approves a third rate cut. Please read through this. It's pretty interesting when you hear someone talk about what was said in the meeting. We'll probably have 2 if not 3 or 4 rate cuts going into next year when it comes to predicting the job market. And I think that's it. That's all I have for you guys tonight. Any questions, as we're not going to see each other for the next couple weeks? Are there any questions you guys have that you'd like to ask for the next couple weeks? In fact, yes, of course. The short answer is if we see an end of the year market crash, of course, we're going to add puts. We just don't see that happening right now. So for lack of a better term, nothing to worry about. Let's just, we're going to let it keep going. All right, guys, any questions you guys have? Any questions you guys have that I can answer for you? All righty, let me give me a quick second because a couple of them came in all at once there. So someone just asked 2 questions on stock replacement. So number one, we just booked hundreds of percents return, like more in the range of 400 to 500%. And so our stock replacement strategy can be leaps, but we're doing leap bull calls because we are worried about a pullback. So a leap bull call gives us a huge credit to use in a pullback scenario, where if we get a 20-30% pullback, we're going to see next to nothing on that credit that paid for roughly half to 2/3 of our covered calls. We're going to dollar cost average our covered calls into the back half of next year, and off to the races we go. So it's not actually just a leap call, it's a leap bull call would be our stock replacement strategy for the stocks we're getting called away from. Merry Christmas to you, Ma. Thank you very much. And the other one, leaps. A stock replacement strategy is our protection in case we are wrong with fully valued stocks. I don't know if you guys know, but the stock market sometimes doesn't listen to reason. It sometimes doesn't listen to an undervalued stock like Disney not roaring back up to 200 with the great earnings it had this last year. Sometimes the stock, when it's fully valued, will continue to run higher. So our stock replacement strategy is taking somewhere between 10 to 20% of the profits that we've made in a stock and putting it into some leap long calls or some leap bull calls that has a protective or adjustment side to the trade so that you're just not trading directionally. Trading directionally is a great way to lose money really quickly. For those of you that are kind of new to this, if you're trading directionally, your stock either has to go up or has to go down or has to go sideways, but there are 3 different ways a stock can move. If you're trying to pick one of those directions, you have a 1 out of 3 chance of making money, or a 33% chance of being right, a 66.6% chance of being wrong. So for that reason, we usually always like to have 2 positions in play that make money if the stock goes up or down. Sideways is the position that really hurts us the most. All right. I see nothing else coming in. Hey guys, Merry Christmas. Have a Happy New Year's. Appreciate you guys being here. We were going to change our login. I actually think we're going to keep the same login for next year for these commentaries. So if you have one that you save, you just log into it every single time, that's still going to work. We're just going to extend these commentaries probably out till December of next year, and it'll be the same login and that we've always used. All right, guys. Hey, have a wonderful evening. I appreciate you guys being here. Look forward to seeing you next year. And guys, appreciate all the comments. Appreciate you guys being here. Can't thank you enough for helping me help you guys better understand what we're doing and why we're doing it. I'll see you all next year. Have a happy New Year's. Take care, everyone. Good night.